some time. So I'm happy to be with you to give you an update on the wildfire safety regulations to help drive down cost of insurance. First, congratulations for your grant. So excited. This makes us really excited when all the fire safe and Firewise get their, grants. This may sound familiar to some of you since the regulations were approved in October 2022. The Department of Insurance worked with the state's emergency response and preparedness agencies, including CAL FIRE, who are here today, and the Governor's Office of Emergency Services to create a list of actions you can take to protect yourself from wildfires. We call it Safer From Wildfires, SFW. This regulation directs insurance companies to provide discounts to consumers with transparency and risk rating. About risk rating. Insurance companies had until April 12 of this year to submit their new rates to CDI for approval. CDI is a short for California Department of Insurance. The regulations required insurance companies that recognize the benefit of safety measures such as upgraded roof and windows, defensible space, and community-wide programs such as Firewise USA and the Fire Risk Reduction Community FRRC designation developed by the state's Board of Forestry and Fire Protections, which currently includes the County of Los Angeles, Santa Barbara, Butte, as well as cities and local districts. So let's talk about the mitigation requirements first. So step one, protect the structure is pretty straightforward. Class A fire-rated roof, enclosed eaves, fire-resistant vents, multi-pane windows, and a minimum of 6-inch non-combustible vertical clearance at the bottom of the exterior surface of the structure. I know a lot of you in this meeting are familiar with best practices. Then step two is protect the immediate surroundings, clearing of vegetation and debris from underdecks, clearing of vegetation, debris, mulch, stored combustible materials, and any and all movable combustible materials from within 5 feet of the building being evaluated, BBE. Incorporation of only non-combustible materials into the portion of any improvements to the property of BBE, which is situated within 5 feet of BBE. And four, again, removal of combustible structures, sheds, and other outbuildings from the immediate surroundings of the home to at least a distance of 30 feet from the building being evaluated. The term building being evaluated is the residential or commercial structure in question and includes decks that are attached or adjacent to the structure. In the event that the applicant or insured does not control the entirety of the area extending to 30 feet of the building from the building being evaluated, the removal of combustible structures from as much of such area as is under the control of the applicant for policyholder is advised. So for the purpose of this regulation, the property being evaluated should comply with Public Resource Code Section 4291 and any applicable local ordinances governing defensible space. And now it's step three of SFW, first it was, property surrounding, and now it's the third one. And third step is of the Safer From Wildfire is an effort to obtain a community level mitigation designation. This will most likely involve at least one, if not more, local government agencies, fire, emergency services, planning, etc. Community level mitigation designation includes, like I said, FRRC by the Board of Forestry, and a Firewise USA site in good standing. You all are aware that Firewise program is a nationwide program created by National Fire Protection Association. And as you just heard, that how many Firewise community we have. California, Cal Fire's Office of the State Fire Marshal's new community wildfire preparedness and mitigation divisions work to assist local communities in receiving this designation. So currently, some insurers are offering discounts for both or either community mitigation and property parcel mitigation. We do not yet know that how the new discounts will look like until insurance companies' rate plans have been approved. So there is a list of insurers currently offering discounts on our website. Along with discounts, transparency is another very important benefit of these regulations. We learned that most people did not know that insurance company assign a risk score to your home or business. People need to know this information because if you know about the risk on your property, you can take action to reduce them and make yourself and neighbors safer. For this, the first time, the new regulation requires insurance company to give you the wildfire risk score for your property, and they have to tell you how they created that score, what factors went into this score. The wildfire risk score or classification must be provided to you at the following 4 times, according to the regulations. When you apply for a new policy within 15 days, before you renew a policy at least 45 days, before you are non-renewed at least 75 days, when you complete mitigation on your property and request a revised score within 30 days. By creating a right of appeal, the regulation is also giving power back to consumers. And if you are not satisfied with the response, the Department of Insurance is on your side to help. So this regulation includes both residential and commercial insurance lines. The property and individual buildings within an HOA will need to be recognized for the mandatory property level mitigation factors listed in the regulation, such as I said, clearing of vegetation, Class A fire rated roof, and the other factors specified in the regulation in order to qualify for a discount. HOA may also qualify for other optional wildfire mitigation effort discounts, and insurance company may choose to include in its rating plan. If an HOA is located within one of the listed community level designation, they may also qualify for a community level discount. So under this regulation, we expect to see more businesses, homeowners, and communities making investment in wildfire safety, greater community resilience, reduced losses for wildfires, more insurance coverage for mitigated properties. We have heard from thousands of Californians who want to see discounts for wildfire safety and greater transparency. This regulation attacks the root cause of non-renewals, which is wildfire risk, and they will make Californians safer, with this regulation. And with accurate pricing of insurance, we expect to see more insurance options for people through a more competitive market. The department expects the FAIR Plan to comply with the new regulations and offer discounts for wildfire mitigation and structure hardening. So you may already know the FAIR Plan currently offers a 10% discount on policies in participating Firewise community. The commissioner and the FAIR Plan have come to an agreement to increase the commercial coverage limit to $20 million. I really also want to encourage all of you to visit our website, as a department has created several online tools at insurance.ca.gov to help you score the marketplace. You could reach out, you could search for our top 10 tips for finding residential insurance for a summary of the information and options available. This basically concludes my presentation. I do encourage you to call us because our callback time is only 2 minutes, and we also have live chat. So now the floor, I will give it to Tress because all the questions you guys have submitted, most of them, she will summarize and answer your questions. And if time permits, we are also going to take more questions from you, live questions. Now floor is yours, Tress.
Hi, everybody. My name is Therese Gallagher, and I am the Ombudsman at the Department of Insurance. Can you hear me? Yes. Okay, I'm having issues with my computer, so I was concerned that you wouldn't be able to hear me. So let's start with some questions we received about homeowners who have already spent money and done the home hardening and defensible space in order to meet the requirements of the new regulation. But when they've received their renewal notices recently, they're not seeing discounts applied to their premium for this work. As of today, the Department of Insurance is still reviewing and has not yet approved over 130 rate filings that were submitted in response to this new regulation. So the discounts are not yet available. We're hoping it will be within the next few months. Each rate filing goes through a rigorous review by the department experts under a transparent set of rules set by Proposition 103. We want to make sure the rate filings are fair and complete. We also had a question about how the discounts will be determined. It is our understanding that the discounts will be offered by mitigation effort, piecemeal. So you will not have to complete everything in the Safer from Wildfires framework to receive a discount. However, the more you do, the more discount you'll receive. The regulation does not specify how much of a discount must be offered for each effort. Each insurance company will determine the amount of the discounts they'll offer. We had a question about why a CAL FIRE inspection stating that your property is safe does not qualify you for discounts. The regulation specifically recognizes, as Durriya said, the fire risk reduction communities and Firewise USA sites in good standing. This doesn't prevent an insurance company from offering discounts for other designations. However, they're not mandatory. So in this situation, you should ask your insurer if they do offer a discount for the CAL FIRE or any other designations that you may have for your property. The next set of questions were about non-renewals, cancellations, people being dropped. So the question was, a fair plan consumer had been dropped, what can they do? So if you receive a non-renewal notice from any insurer, fair plan or an admitted insurer, that notice must tell you why you're being non-renewed. If you do not believe that reason's accurate, you can submit a request for assistance to the Department of Insurance and we'll look into your specific situation. Additionally, if you receive a non-renewal notice that is dated less than 75 days from the date the policy will expire, please submit a request for assistance to the Department of Insurance. By law, they must send it to you 75 days in advance. A cancellation is different from a non-renewal. A policy can be canceled at any time during the policy term, while a non-renewal occurs when your policy term ends. A policy may only be canceled for specific reasons. Those reasons include non-payment of your premium, fraud, material misrepresentation, or physical changes to the insured property that increase any hazard it is insured against. The insurer must mail a notice of cancellation to your last known address at least 20 days prior to the effective date of cancellation. It's only 10 days if the cancellation is for non-payment of premium or fraud. And while the California FAIR Plan is the insurer of last resort, they do have some underwriting guidelines that may prevent them from offering you a new policy or may be cause for non-renewal or cancellation. Again, the reasons will be in the notice. You can submit a request for assistance to the Department of Insurance if you want us to look into it. And then we come to rate filing. Oh, the other part of what can they do. We understand that if you were on a FAIR Plan policy, chances are you probably couldn't find a policy in the admitted market at the time you purchased the FAIR Plan policy. That may not be true today. There may be insurers now in your area willing to write. But if you can't find anyone, you may need to go to a surplus line insurer. That's number 10 on our top 10 tips for finding residential insurance that we will send a link to. And then we come to rate filings. There were a couple of questions here. Please be aware, there is quite a bit of misinformation circulating around what has and hasn't happened with rate filings recently. And hopefully we can clear some of that up today. So Proposition 103 was passed by voters in 1988. It requires prior approval of all automobile, homeowners, and casualty insurance rates, no matter what the amount of change is. Proposition 103 also authorizes a process for consumer participation in the administrative process of setting insurance rates and allows for an intervener to request a public hearing for any proposed rate increase over 7%. Insurers mistakenly think a public hearing is guaranteed if they request a rate increase higher than 7%. In reality, The last rate hearing that we had that was not initiated by an insurer was on a homeowner's rate filing submitted in 2014. Since then, the department has received over 430 personal lines rate filings seeking a rate increase of greater than 7%. Not counting any currently intervened rate filings, only 10 of those 430 seeking greater than a 7% increase were intervened, and none of those went to a rate hearing. Excuse me. It is up to the insurance company to determine how much of a rate increase they submit to the Department of Insurance. Most insurers ask for a 6.9% increase to avoid the intervener and the hearing. Once that is approved, they submit another 6.9% increase. When that one's approved, they submit another 6.9% increase. Using this method, an insurer will never get to the amount they truly need. The department can only review and approve what is submitted to us. Rate filings are public. They may be viewed on our website all throughout the process, while they're being reviewed and then after they've been approved or denied. There was a question about, do we have a list of who currently insures homeowners in the state? We do, and we will send that link as well. And then, let's see, we had another question asking if it's possible to require insurance companies to look at Firewise communities separately rather than looking at entire zip code. So unfortunately, as a regulatory agency, the Department of Insurance does not have the authority to approve or deny an insurer's underwriting guidelines, provided they are not unlawful and are not applied in an unfairly discriminatory manner. The new regulations, however, as Durriya mentioned, do allow for you to receive your risk score during those 4 certain times and a process by which you may appeal those scores. So you can get your property looked at as a parcel as opposed to a zip code. And then if you're in a Firewise community, that should be taken into account as well, I hope. There was a question about if a property stores over 2,500 gallons of water designated for use in a fire, why isn't there a deduction on homeowners insurance? This is another one where you should ask your insurer. There may be insurers that do offer discounts for something like that. I don't know who they are, but check with your insurer. And then there were a number of questions that it's just not appropriate for CDI to respond to. Those were questions about the cost to rebuild, planning fees, the time it takes to get permits. Those would be better addressed maybe by your local planning department. And then there was questions about what good sprinklers do in a wildfire. Maybe your local fire department or possibly CAL FIRE could address that, but the Department of Insurance doesn't have answers for that. And then I have a couple of links for filing a request for assistance. So a request for assistance should be submitted when you have an issue with your policy, a claim, your agent, any of our licensees, and that we'll look into that specific case. We can't give like general information on specific issues that you may have. So that's when a request for assistance should be submitted. We also have a consumer hotline that will answer general insurance related questions. You can reach those at the number up in the corner of my screen here. We'll also send that. And we also have a live chat feature. If you go to our website, which is insurance.ca.gov, in the upper left-hand corner, there's a picture of the commissioner, and just below that, it says file a complaint. If you click on file a complaint, wait 5 to 10 seconds, a button will appear on the right-hand side of the page that says consumer live chat. You can click on that and have a live chat with one of the officers on our consumer hotline. I hope this information has been helpful. If we haven't addressed your questions, we either may be still looking into that for you, or we may have missed them. We'll also send this along, but the email address that you can send your questions to is crob@insurance.ca.gov. Back to you, Durriya.
Thank you so much, Tress. Tress is amazing at answering and getting all the questions and, answering them. And she does that all the time for us all, So I just want to open it up. We do have a few minutes, and if you have, we will take some of the live questions if you have any, and if we could answer it today.
So you said that the discounts were sort of piecemeal and that the insurance companies would look at that. But I would imagine that they would need to know the efforts that we were already putting into our communities, as well as the assets we have available for wildfire mitigation in our communities. How do we get that information to the insurance industry while they're considering these discounts? How do we get that information to them? I mean, as a whole, not one company at another. Is there a resource at the state level that we can post this information and say, hey, my community has a hydrant system, my community has backup generators, my community has underground power lines? Things such as that should be a part of that consideration.
So there's two things. So insurance companies themselves don't calculate the risk or your risk score. They contract with private companies. Two of the most common that you may have heard of are Fireline or Verisk, and the other is a CoreLogic. So getting the information to those private companies is what you would need to do. I will, if you can send me an email to that email address with your contact information, I will find out if there's a way to do that. I off the top of my head don't know how you would get that information to the risk modeling companies.
It seems like there's a disconnect there. We're not connecting with the insurance industry as a whole. If we're working one-by-one basis with the insurance companies, that's, each property owner would have to do that. But as a community, the Firewise community or Fire Safe Council, that information could somehow get to the insurance industry. They would all know that, my community has underground power lines.
Right. And I believe that the best way to do that is to get that information to the risk modeling companies that they are contracting with to get these scores. Because again, the insurance company themselves is not evaluating your property. Gotcha. They're paying a private, and I don't think I've ever heard of anything other than CoreLogic and Fireline, although there may be something else out there. But like I said, if I can get your contact information, I will check with our people and see if there's a way to get that type of information to those companies.
I have a question. I don't know what to tell my community members. I have an example. Many people are reporting 100% increase, 200% increase, 300% increase on their insurance premiums. One home in particular, every risk, every mitigation effort has been complete. Newer builds, closed deeps, everything, yet the rate was doubled, 100% increase. I don't understand how the insurance companies cannot, if they want to increase it by more than 6.9%, how is it the consumer can be seeing 100, 200, and 300%?
Okay, so to clarify, I should have been clearer in this when I was stating that 6.9% is an average across their entire book of business. So one person may get an excessive rate increase and 20 people may have gotten a decrease to balance it out to the 6.9%. However, there may be other factors involved. So I would suggest that person submit a request for assistance. We will check with the company. We will verify that they are charging the rates that we've approved. I have heard recently, and I don't know if this happened in this situation, every few years, and it's not a set number of years, each insurance company does their own thing. Insurance companies will run the property through their software and they'll say, they've had $200,000 worth of coverage for the past 10 years, but now we calculate to rebuild, it's going to be $400,000. And they'll increase your coverage. They'll put it in there somewhere in, 2-point font somewhere. And so that also brings up your premiums when they increase the amount of coverage. So submit a request for assistance to us. We will go through the rate increase. We will make sure that it's accurate and that there wasn't a keystroke misentry or, something didn't go wrong. As far as you said that they've done these mitigation efforts, again, because the new rates aren't approved yet, those discounts aren't occurring yet.
Thank you.
And I just want to add one more thing to submitting requests for assistance. Those are how we learn what's happening and where it's happening. Insurers don't report to us, we're going to stop writing in zip code 12345. We find that out when we start getting a bunch of requests for assistance saying they non-renewed everybody in 1, 2, 3, 4, 5. So feel free to use that request for assistance form for any type of complaint you have. That's what it's there for. And it helps us to know what's happening.
Is that it? Thank you so much. Thank you so much for providing me and Tress the opportunity to be with you today. And like Tress said, crop@insurance.ca.gov. Send us the questions and we are going to answer it. Sometimes it takes us a little bit more time to answer because we will be asking the expert and we will be doing that, but we are pretty good at answering all the questions. And please do make use of the live chat because each policy is different. And each policy needs to be reviewed in a different way. What we presented today to you is very general, you know, and also with fire safe councils, we are here. I didn't say that in my presentation, but if you are, you know, applying for grants and stuff, we would love to write a letter of recommendations for you also, if you need that. So just wanted to say that part. And again, congratulations on your grants. And thank you so much for having us.